uranium, no surprise to anyone for me to say, it's happening right now. I love uranium as a bit of a case study for metals investors because uranium spent 6 years from 2016 to 2022 working through excess supply, right? The spot market was oversupplied. It was sloshing around. You couldn't get any momentum in the uranium spot price. There was like a bullish event here, a bullish event there, but you just had to churn through all kinds of excess supply on the spot market. But that happened. It took 6 years, but it happened. And now there is not excess supply in the spot market, okay? That is why the spot price has doubled in the last 8 months alone. And importantly, with the spot price of uranium, this isn't a speculator's price. This is an average of transacted terms, two-party deals on a particular day. That's what there's no public market for uranium. It's just actual transacted deals. They have to report them to TradeTech and UXC, who then take averages, and that's what determines the spot price. We had a big jump in uranium to start January for 2 reasons. And I mention them because they're important, but also because they capture the 2 factors that matter in uranium right now, which are the lack of supply and the East-West divide. So we don't have supply in the market, in the spot market, and Kazatomprom came out and said, oh, sorry, we're actually not going to make guidance this year, and they're not going to make guidance in 2025 either. They haven't said that, but they're not going to. That's not a surprise for anybody who follows uranium, but it still is dramatic because Kazatomprom is responsible for 40% of the world's production. Their cuts back in 2016 and 2017 helped right the market when it was drowning. Their return to full production was supposed to help fill the gap that we're now facing, and now that help has been delayed by several years.
Real quick break here, guys. If you are a mining investor, you are without question familiar with the Golden Triangle region in British Columbia. This is one of the most prolific mining regions in the world due to its vast deposits of gold, silver, and copper. Now, for the last 4 years, Dolly, Varden Silver has been busy expanding their high-grade silver deposit in the Triangle, and they are backed by some of the smartest investors in the silver business, including the legendary Eric Sprott, Hecla Mining, US Global Investors, Fidelity, Delbrook Capital, Sprott Resource Corp, and more. If you are curious why the smartest money in the silver business is cozying up to Dolly Varden Silver, then hit the link beneath this video.
The other big thing that's in the uranium market is the East-West divide. And also at the beginning of January, we got the next pledge of support for domestic nuclear energy from the US government, which was they pledged $500 million to help support the build out of fuel processing capacity. The whole East-West divide thing, right? America consumes 48 million pounds of uranium a year, biggest uranium market out there. China will get there pretty soon, but for now, America is the biggest uranium market out there. 2 years ago, they made 9,000 pounds. That's how many pounds of uranium America produced 2 years ago. Last year, it was 200,000 pounds, I think. Still, drop in the bucket relative to consumption of 48 million pounds. Now, about half of that 48 million pounds, absolutely, they source from non-US but friendly, you can call them sources, specifically Canada and Australia. And that's all well and good. But the other half comes through the port of St. Petersburg. Some of it is Russian uranium, a bit. A lot of it is Kazakh uranium that comes through the port of St. Petersburg. So when there's all this talk about no Russian imports of uranium, that's not just uranium that's produced in Russia, that's Kazakh uranium, because Putin controls whether that uranium leaves the port of St. Petersburg. So, huge thing that is literally bifurcating the market. Back in the Cold War era, we used to have 2 uranium spot prices. We had a free country spot price and we had an Eastern Bloc spot price. We are literally going back there. We are going to a situation where Russian Kazakh uranium is only going to go east to China and India, and then there's going to be Western uranium, if that's what it ends up being called, and there isn't enough of it. There isn't enough for either side of the market, but there especially isn't enough for the Western side of the market. So anytime you get a piece of news that reinforces either side of that, the lack of supply or the East-West divide, the investors who are somewhat hesitant because the nuclear sentiment hangover is a real thing get yet another reason to erase their hesitation and be like, oh, this is a very fundamental market. This is not a speculation market. This is a fundamental market where we don't have uranium. And America can, in time, start producing enough uranium for itself. It used to produce over 40 million pounds of uranium. And then guess what? The Cold War, we became friends with Russia, and everything shut down. And so you can gradually get back there, but it's going to take a long time. The easy restarts of that production are coming now, but that's going to sum total a few million pounds over the next few years. Far cry from what is needed. It will take the hard pounds to balance the market, but the hard pounds are the big new hard rock mines. And how easy is it to permit any big new hard rock mine? It's not. We know it takes a long time. Uranium is usually harder. This is the Cameco supply-demand gap chart. This is before Kazakhstan admitted that it will not meet guidance, although Cameco may have incorporated that because they obviously knew ahead of time from their own assessment. But you can see this is a very real situation. But this market has staying power. There isn't an easy answer. The mines just aren't ready. The East-West divide is significant. And so you can, in a market that's this fundamental and has this much oomph in it, you can play across the spectrum. One thing that I think is really interesting is that pre-discovery explorers in the uranium space haven't really moved yet. The producers, the advanced projects have moved significantly, for sure, but the pre-discoveries haven't, which means the rising tide isn't yet lifting all boats. I think that will happen, so you can argue that there's likely some easy upside in the pre-discoveries as the market just decides to really flood into the space and starts lifting all of the boats. But the gimme is to just own growing U.S. production and the best advanced projects, because those are what this market specifically needs to fix the problem that it's facing. So those are 3 examples. There are others. That's what I'm doing in uranium.